You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 24th day of January, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day, our live training room. That is our first live broadcast of the day. And that runs from 9:15 a.m. Eastern to 11:30 a.m. Eastern. That is a private broadcast reserved for our traders only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, please go to mytradingiq.com, and at the very top of the page you'll find a link that says 5-day free trial, no credit card required, and all you got to do is click the link. When you click the link, you're going to get a registration form. Please take a moment to fill it out properly. If you don't fill it out properly because it's an automated process, we won't know that you want to take the trial. Now, you don't have to worry about what day of the week or weekend or hour of the day you sign up for the trial. Because here's what happens. Once you fill out that registration form, first thing we do on our end is we get your indicators indicating, get your desktop ready to go, and then the following day, that's when the trial actually begins for you. So if you were to do that today, which is a Wednesday, then your trial would start Thursday. So you might think, that means I'm only going to get 2 days. Not true. You get 5 consecutive trading days, even if it stretches over a weekend. So what better day to take the trial than today? Because we'll get you set up today. You'll have Thursday and Friday to experience everything. And then you'll have the weekend to experience all the resources that are available to our lifetime members. And then you'll still have 3 days of the trial next week, Monday, Tuesday, Wednesday. 5 consecutive trading days, even if it stretches over a weekend. So, get after it. Now, when the live training room ends, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. There are 2 different ways to join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com and just scroll down the page to where it says afternoon broadcast. Click the link. You'll have a very simple 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts, and there's a link in that email. So at 12 noon Eastern, all you have to do is click the link in the email, and you'll automatically be logged into our platform. The benefit of doing it that way is you have access to the question box so that you can ask questions and participate in the discussion. Now, there'll be days, obviously, where you'll be out of the office, away from your desktop, but you'd still like to join live. You can. And there'll be days when you're busy and can't join live, but would like to get caught up on everything later. You can do that too. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. It's easy to remember. You already know the YouTube part. Just throw in a /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure right on our YouTube channel. Now, again, that allows you to connect live to the broadcast if you're out of the office. If you miss the daily broadcast, it allows you to get caught up. And if you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Of course, you're not going to watch all of them, but, just pick a few days at random. Listen in a little bit. You'll discover the thread of connectivity, the thread of continuity. It's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. So we are going to open with the daily devotional and a word of prayer as we do each day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us and he'll give us a recap of what happened in the live training room. And then we'll go live on the TradingView platform for 30 minutes. And I'll come back. I'll finish up any of the recap I have left to do. And we'll close up shop with our good word for the day, as we do each and every day. So, we are on a new topic starting today. How to be rich God's way. Today's scripture is 1 Timothy 6, verses 17 through 19. And I'm going to share with you from the Message translation. Tell those rich in this world's wealth to quit being so full of themselves and so obsessed with money, which is here today and gone tomorrow. Tell them to go after God, who piles on all the riches we could ever manage, to do good, to be rich in helping others, to be extravagantly generous. If they do that, they'll build a treasury that will last, gaining life that is truly life. Now that's from a letter Paul wrote to Timothy. 1 Timothy 6, verses 17 through 19. Now, you already know this. Money does things to people. The Apostle Paul was a mentor to a younger man named Timothy. And in effect, he gave Timothy lessons on wealth. Now, it wasn't because Timothy had a large estate, but as a young pastor, Timothy was in charge of preaching to people in places like Ephesus. By this time, many rich people had embraced Jesus and his teachings. Churches were popping up in many of the port cities that ring the Mediterranean. Port cities were epicenters of trade and wealth. Paul, who had planted many of these churches, knew that rich people faced unique challenges as they adopted the new world view introduced through Christianity. Just like today, Christians of Paul's time were vulnerable to the dizzying effects of money. So he addressed some of their specific needs in a letter to his young protege. When I ran across this in 1 Timothy 6:17, I thought what most people think. I can skip this part because I'm not rich by the world's standards. Rich is that other guy, that other family. But then I got to thinking. I've been to some places in the world where I was the rich guy. Mexico, Uganda. I visited places where I felt very rich in this present world. In fact, if you earn $250,000 a year, you are in the top 3% of wage earners worldwide. And you know what? Money does things to people. People who are rich have tendencies and propensities that are unique to them. Those tendencies can be attributed directly to the presence of riches in their lives. The more a person possesses, the greater his potential to acquire a distorted sense of reality, and the greater the odds that he will lose his sense of balance. So Paul instructs Timothy to do what he can do to neutralize the effects of wealth on the wealthy. Money can make us arrogant, and over time it becomes our primary source of hope, leaving us with the impression that we are self-sufficient. Wealth has its own gravitational pull. It will always draw those who have it in the direction of those two things. It is in this way that wealth eventually possesses the possessors. Cross a river and the current will pull you in a downstream direction. Cross paths with wealth, and you will be drawn in the direction of arrogance, the illusion of self-sufficiency. To survive the test of wealth, to be good at being rich, one must learn to compensate and resist sinister force. And that's what we'll be talking about for the next few days. How to be rich the good way, God's way. Join me in a word of prayer. Heavenly Father, as we come before you in prayer, thankful for the wisdom and guidance in that letter from Paul to Timothy. Lord, we acknowledge that all we have comes from your gracious hand. May our hearts never be haughty or set on the uncertainty of worldly wealth, but on you, the true source of all blessings. Lord, help us to be rich in good works, generous in sharing, mindful of the needs of others. May our lives be a testament to the richness of your love and grace, and may our actions reflect the generosity that flows from a heart anchored in you. Lord, as we steward the resources you've entrusted to us, guide us in using them for the advancement of your kingdom and the well-being of those around us. May our lives be a living testimony to the transformative power of your grace. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Happy Wednesday. Hope it's a happy Wednesday for you. Whoever you are, wherever you are. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 105 points. The NASDAQ is up 162 points. That's a little over 1%. The S&P 500 is up 30. The Russell 2000 is up almost 6 points. In the commodity basket, crude oil is up $1.18, trading $75.55 last. That's a gain of over 1.5%. Gold is down $7.70, trading $20.18.10 last. Silver up 42 cents, trading $22.88 last. That's a gain of almost 2%, or almost $2,500 per contract traded. When the price of silver moves $1, that's worth $5,000 per contract traded. Crude moves $1. That's worth $1,000 per contract traded. And when the price of gold moves $1, that's worth $100 per contract traded. In the Asian markets at the close, the Nikkei dropped 291 points. The Shanghai gained 49. The Hang Seng gained 545, which is over 3.5%. In the European markets at the close, FTSE up 41. The DAX up 262 points. It's a little over 1.5% for the DAX. And the CAC up 67 points, just shy of 1%. So we had a mixed day in Asia. In fact, the only red on the screen is the Nikkei, which again was down 291 points. So we had a mixed day in Asia. It was a green day for the UK. And so far, it's a green Radio Wednesday here in the US of A. So with that, let's go to Logic 247. That's our 24/7 around the clock E-mini alert service. We're in week 286. In other words, it's been 286 weeks since we officially launched the Logic 247 alert service, and that was after our beta test. So it's 286 weeks plus the beta test. During that time, we've issued over 15,900 individual handcrafted alerts. Now, this recap was done this morning at 6:30 a.m. Eastern. by Valerie, and she will update it this afternoon and again this evening. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 29 alerts. One never triggered. Still waiting on 7. 21 actionable alerts, of which 5 or 24% would have been stopped out based on market structure and a very simple process we teach all of our passport holders. Now, the logic alerts are based on current price action, but there's time built into each alert for you to get the alert, study your 30-minute chart, see the window of opportunity that it represents, and then be prepared to take action when price reaches that area, using everything that Michael teaches you each morning in the live training room. So the 30-minute chart is your roadmap. That's where all alerts are created. And then you actually execute on the smaller time frame, the 7-tick range chart. Michael does a complete lesson plan each day, talking about the different elements of the trading strategy, which at first might seem a little complicated. But after a couple weeks, you'll recognize the incredible simplicity that we've worked very hard over the years to achieve. Take out the chaos, make things clear, to go for the day, and have the discipline to put the mouse away. A logic alert can come out at 2 a.m. or 2 p.m. as opportunity presents, because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. So this is where we stood at 6:30. Some of these waiting have probably resolved. Plus I added a couple of additional. So Valerie will bring everything up to date this afternoon, and then probably again later this evening. Now, again, we're in week 286, and over those 286 weeks, we've issued 15,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again based on market structure and a very simple process we teach all of our lifetime members. Now, long before we had Logic 247, we had our concierge trade alerts, which we still have, and they're a little bit different. Keep in mind, the purpose of all the alerts is not for you to just trade the alerts and not worry about learning how to trade. The alerts are part of you learning how to trade. But the logic alerts, you have time to study your 30-minute chart, understand why there is a window of opportunity there, and I look left for you to spot potential obstacles. If it's a long, I'm looking left for previous swing highs that could become current resistance. If it's a short alert, I'm looking left for previous swing lows, which could become support. But the CTAs is where you're stepping up your game and you're learning to look left yourself. That's a really important part of the process, okay? Now, the CTAs don't come out around the clock like the logic alerts. The CTAs are posted as a static report shortly after the Globex open. So last night, the report was published 10 minutes after the open. Now, today, of course, is the Wednesday session, and if you come from the world of equities, you're accustomed to the Wednesday session starting at 9:30 a.m. Eastern. But for those who trade futures like we do, we know that the Globex market opens at 6 p.m. Eastern. So even though today's the Wednesday session, it began last night, Tuesday night at 6 p.m. Eastern. Now this afternoon at 5 p.m. Eastern, the Wednesday session will end. The markets will go quiet for an hour. And then at 6 p.m. Eastern, the markets will reopen, and that will mark the beginning of the Thursday session. So as we go through each one of these markets today during this broadcast, keep in mind that our traders had these targets for each one of these markets. We'll be looking at the 30-minute chart. So remember, 10 minutes into the life of the first 30-minute candle is when this report is published for all members and trial members. Now, what do you do when the report comes out? We'll use the ES as an example. Make note of where price is at this time on your 30-minute chart. Even if you don't show up till 8 o'clock, you should still make some kind of mark on your 30-minute chart where price was at the time of the release. Okay? Then, draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. When we go to the charts, you'll see a green line on my chart. You'll see it on my daily chart. You'll see it on my 30-minute chart. It stands for bull bear cross. No matter what time frame you put it on, if price gets above the green line, we anticipate higher prices. If price gets below the green line, we anticipate lower prices. It's really pretty simple. Now with the CTAs, remember you get to look left yourself. But the logic alerts I'm giving you, if you look at the logic alerts in the channel, most of them have multiple targets. Okay. The initial target is designed to just help you get your goal for the day. Put the mouse away. But there are additional targets on most logic alerts, and that's from me looking left to see where the market may potentially find support or resistance, depending upon if it's a short alert or a long alert. Over time, you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the weekly trading zone above. Price is below the 30-minute BBC. It's trying to get to the zone below. We've published the zone since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. And once they are published for the week, they're carved in stone. They don't change in any way whatsoever. Now, because this broadcast is open to the public, if you want to grab a screenshot, you can. If you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit pause on the video and jot down numbers that would be important to you because as I said during this broadcast, we will walk through each one of the individual markets. Okay. With that, we'll go to the daily chart. Michael should be joining us here in about 10 minutes or so, 10 to 15. I will pause at that point. He'll give us a recap of the live training room. We'll go live for 30 minutes on TradingView, and then I'll complete the recap. So, here we go. We have overcome that 62% fib extension. Looks like we're pretty much at the high of the day. And overhead, we've got that 100% fib extension. Now it took 1, 2, 3 days to break through the 62% fib extension. Back here, the 38 took 1, 2, 3. It was the fourth. Well, no, it was 1, 2. The third day that we broke through, but we failed to hit the 50. So we got a retracement, another push, and that took us up to the 50. And so we hit that 50 like 4 different days before we finally made our way through. Now notice here how as we're moving up, that 38 was resistance. But as we pulled down, it became support, along with the help of the BBC. That's the green line I was talking about. When price gets below the green line, we're bearish. We anticipate lower prices. When price gets above the green line, we're bullish. We anticipate higher prices. The pullback to the BBC, whether it's from below or from above, holds more often than not. But eventually price will trade through the BBC. And instead of drawing legs to the downside, we start drawing legs to the upside. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg. Okay. Now, the reason we look at the daily chart is because I want to encourage you to, no matter what you trade, whether it's futures, stocks, crypto, forex, ETF, spend 2 minutes looking at the daily chart before you start your trading session. Why? Because institutional traders, they're the ones who move price. They look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? It has to do with account size. Most of the major institutions have accounts in the hundreds of millions, billions, even trillions of dollars. When they trade in the size they trade, price moves. So by just spending a couple minutes with the daily chart, you can see what the deep pockets are doing today. They're definitely buying, no question about it. Now, 2 days ago, we hit the 62 and we backed off. But yesterday, buyers came in and managed to push us back up to the 62. And then we opened last night and they kept buying. Our strategy and indicators aren't designed to outsmart the institutions with their infinite resources or beat the market, whatever that means. Our strategy and indicators are designed to help you see what the market is doing based on the actions of the institutional traders at any given moment in time, so that you can do what the deep pockets are doing long enough to get your goal for the day, and then have the self-discipline, put the mouse away. As I said earlier, all alerts are based on the 30-minute chart. This was the opening candle last night. The vertical line separates today, Wednesday, from Tuesday, which was an incredibly flat day. When price rises to a weekly zone, we expect resistance. When it drops to a zone, we expect support. 70% of the time, when price encounters a zone, you'll have consolidation, like here, like here. 20% of the time, it will be rejection, which is this. 10% of the time, it will be what we call the slice. That's when price slices through a zone on the 30-minute chart like it's not even there. Typically, when that happens and the move runs out of steam, price will retrace to the zone it sliced through and then continue in the direction of the slice. So there's only three things that are going to happen at a weekly zone. Now we only have one more zone overhead for the week. We've still got 2 more trading days. Is it possible we get there? Always embrace all possibilities. Okay. Pull back to the BBC held even though we spiked it. It reached down. Well, we opened last night 10 minutes into the life of this candle, or when the targets came out. And even though the step line crossed, which typically leads to a pullback, the markets were so bullish, they just rode the back of blue and climbing right up to the target. In the zone where we consolidated for an hour, and we continued higher. And then this morning at 10 a.m. Eastern, I believe there was some news that came out. We dropped to the zone, which we expect to be support. And the BBC holds more often than not. So even though we spiked the BBC, it still held. Because this was a red candle all the way down to the zone. But by the time the 30-minute candle closed, it had become a green candle. A lot happens in 30 minutes. And so this is the high of the session, 49.3175. So we got a double top right there. We break that, then we continue higher, but this move is getting a little long in the tooth, so we'll see how much higher we can go today. On the Dow, here's where we opened last night, above the BBC, and up we go to the long target at 38,140. This candle here opened at 38,105, so it ran up about 35 points to the target. And you only need 20 points with the Dow to get your goal for the day. With the S&P, you need 2 points. Russell, you need 2 points. So we consolidated at the target, pulled back to the BBC, the pullback held, and that sent us up to the zone overhead, which is 38,220/225. We spiked it a little bit. Okay. Now this is Wednesday, Tuesday, Monday. Okay. We have not yet taken out Monday's high. We got a high, a lower high, and a lower high. We are above the BBC, but we've got the zone overhead acting as resistance. And that's what we anticipate. On the NQ, here's the opening candle last night right here. Gets us above the zone, takes us right up to the long target. We overshoot the target, continue up to the zone where we find resistance for 1, 2, 3, 4 30-minute candles. Now notice we did pull back the BBC, the pullback held. It holds more often and it doesn't. Then we had a slice. Remember, only 3 things happen at a zone. This candle, really this is consolidation, which you're going to see 70% of the time. But the final candle just sliced right through. But then what happened? When it ran out of steam, it retraced right back to the zone it sliced through, and then continued in the direction of the slice. So you've seen already the only 3 things that price can do when it encounters a zone. 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. Okay. All right. Michael should be here. Yep, he's still got a couple minutes. Crude oil, here's where we opened. We pulled down to the zone, which we expect to be support, and it was. Price got above the BBC. We got a leg, a retracement, then another leg that took us right up to the target. Now, this candle opened at 74.60, and this wick was a continuation of this green candle. But once it hit the target, then it reversed and pulled back to the BBC. So that's a $200 per contract move, although you already had blue and climbing. I mean, you could have gotten long anywhere along this area. This candle opened at 74.50, so that would be a $300 per contract move up to the target. If you've earned the right to trade 10 contracts, it's a $3,000 move. So then price gets below the BBC, hits the zone support, just like over here. Over here, we consolidated, but here we got rejected. See, this was a red candle all the way down to the zone, but by the time the 30-minute candle closed, it had bounced up above the zone. But we're below the BBC, and we got red and falling overhead, so at this point we still expect lower prices. So we consolidate at the zone, and this one candle right here reaches down, touches the zone to the tick. Now remember, these zones were published Monday morning at 6:15 a.m. Eastern. And what's price done? It's gone from zone to zone to zone, back to the zone, back to the zone, back to the zone. You get the idea. That's how price moves from zone to zone to zone. And so we've now overcome 75.15/20. We've put in a high on the day here. Still got one more zone left overhead, and we got 2.5 days if the market chooses to go there. Michael has arrived, so what we'll do is we'll pause this recap. Michael will tell us what happened in the live training room this morning. Then we'll go live on TradingView for 30 minutes, and I'll come back, complete that recap, and we'll close out with our good word for the day. Good morning, Michael.
Okay.
Or good afternoon.
Good morning, Dwayne. Yes, good afternoon to you. For me too. Good afternoon for me. Still good morning for you.
Yeah, still morning for me.
All right.
Okay, it looks good.
All right. Here we go. Make sure I have this ready for you. Thank you. Okay. Good afternoon, everyone. Today is Wednesday, the 24th day of January, 2021, 24. If not free trust, go here to mytradingiq.com and click on this button right here. Sign up for your free 5-day training now, 9:15 to 11:30. When you click on that, it's going to bring you to this page, registration page. On this page, yes. Excuse me, I just sneezed right in the middle of that. All we ask for is your name, your email, and phone number. Down at the bottom, if you have TradingView, go to TradingView, login ID, or username, and if you have Ninja Trading, give us a machine ID. All right, hit the register button, and you'll be sent everything you need to get into the room in the morning. Now, if you bother going that far, you might as well go here to trading platforms and make sure you have your trading platform ready to go when you start the trial. Okay, it just makes sense that you would have a trading platform that applies to what you're going to be seeing in the trial. You can trade along with us. All right, if you need any help with that, you'll have my phone number and all that stuff as soon as you sign up for the trial. Okay. So spreadsheet, we had a little trouble getting the goal for the day today. I made 4 mistakes right at the beginning, and I paid for every one of them. And so it took me a little while, but we did eventually get it. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down to the bottom. Today is the 24th day of January 2024. We had 82 ticks on the NQ, 25 ticks in the Russell. We lost 10 in crude, and we lost 10 on the ES. Now, that put us at $310 per contract on the morning session. Today, it took 83 minutes, almost an hour and a half. And, excuse me. I'm not sure that number's right. 83 minutes. 42. I don't think that number's right. It might be. Anyway, I'll just go with that. I think it's less than that, but we'll just go with that. 83 minutes and 18 trades. I know the 18 trades is right. To get to $1,430, and we only took a total of 20 trades this morning. It's 1 a month now. We're at $8,387. Think about it. It was, yeah, that's right. It is right. It was 9:15, 10:15, almost to 10:45. So anyway, on the month now, we're at $8,387. Today's averaging $524 per contract for 2-hour trading day. Same thing are down dramatically since yesterday because that 83 minutes today. But we'll get it back up there. A couple of good, quick goals. We'll get that number back up there again. Anyway, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month starting in January of last year, we'd be at 13 contracts right now. And we are at 13 contracts. As a matter of fact, at the end of next week, we're going to be at 14 contracts, right? Let's see. Next Thursday, we'll be at 14 contracts. But doing all that so far this year, you would have only had to work 7 hours. This number was thrown this morning because it was just a round number sitting there, and I didn't know what it was for. 7 hours so far this year. Because remember when we hit 5 hours, we had 300 minutes, and it was an even 5 hours. And today, 420 minutes and even 7 hours. 83 minutes. 83 minutes. If that number was 1 less, 82, then that's no longer 7 hours down there. 6.98333. But it worked out to be 83 minutes is what it worked out to, and that is just how the math worked. 7 hours even. So we're averaging $4,355 per hour. Just math just throws me. Love it. Anyway, let's get into the actual trades on the year, all that stuff. Let's get into the trades on the crude oil. We didn't have one on here on crude today. We did have, hey, I made a gain on this and I didn't put it in there. I'm sure it wasn't a very big one, but I didn't add it in there. Okay, so right here, I think it was a break even. I don't think I meant to have a blue arrow there. I meant to probably have a yellow arrow. If I didn't get a gain on that, I don't know what it was, but we stopped out on this one right here. This was our first trade on crude and we stopped out minus 10. Next trade over here, I think it, but I know we didn't get any significant profit there. I was looking for it to get up into the weekly trading zone, and it did get into the zone right after I got out of it. I'm almost ready to break even on that. The next one, well, we had this right here that went enough to get the stop to break even if you're watching it. But I don't think I was. I think I had just gotten my goal before that, and I was filling things out. This happened during the break. We stopped you out right there. Not a lot happened with crude oil today. Did have crude inventories come out today. I didn't check and see what they did have crude inventories come out today at 10:30. I wasn't paying that much attention to it at the time. This is the Russell. Now we started out with a stop out on the Russell. That was a mistake on my part. Right in here. I did not move my stop to break even, and it stopped me out. And that ended up being a little more of a deal than it should have been, because right here, where I stopped out on that first one, I was -10. Then I only picked up 2 ticks on this move right here. And then I ended up missing them after that, right? Thinking it was no big deal. But then I stopped out. I made some more mistakes, and I ended up stopping out again. So we went from -10 to -8, and then we picked up 3 ticks there to get us to -5. Then we had a couple of break-even trades, and then we had a big trade right here. We went from -5 to +15, so we had 20 ticks on that one. And then our last trade on the Russell, we started doing the lesson plan. Our last trade on the Russell, we picked up 10 ticks right here on that one right there. And all this stuff, I was comparing the old school stuff to the new school stuff. Those you guys who are in here right now who knew the old school stuff, drawing the trend lines and all that, and how we used to have to do that. During the break, there was a nice trade right there, a nice blue arrow there, a blue arrow here that would have just about stopped you out to the tick, it looks like, and no more blue arrows on the Russell. And that was it for that. The ES, now my mistake on the ES was right here. Yesterday, when I was doing stuff yesterday, I had the ES on the 4-tick range, and so I changed the sensitivity, and I left it changed for the 4-tick range. So there was a valid trade right here on the 4-tick range, not a valid trade on the 7-tick range, and I took it from the 4-tick range, and it stopped me out. That was my one mistake on the ES. Here on the 7-tick range, at 4:30 in the morning, it gave a long right there, and over here it gave another long during the lesson plan. I think I totally missed that. It hasn't done anything since. So the ES was kind of a little bit of a mess. Today. Let's see the NQ. Now the NQ, we started out with a stop out too, I believe. Right? No, we started out with profit on these, but then I made a mistake, and I ended up getting stopped up. Go back here to the beginning on the NQ. I'll bring the question box up in case anybody has asked any questions. Made any statements? Not yet. Okay. Go all the way back here. I'm not showing our first trade on the NQ. All right, our first trade on the NQ, we picked up 12 ticks. Oh, right here. Here it is right here. Okay, our FQ. Actually, this was our first trade. We had a break even. Then we picked up 12 ticks on this one. Then we had another break even right in here. This was off the ribbon right here. We had that break even. And then we took this one right here and we stopped out. So at that point, we're at -12. Then we missed a couple of blue arrows all through there. Missed some more blue arrows all through there. Then yeah, this was like an hour later. We started getting in here and trading during the lesson plan. We picked up 30 ticks on that to put us at +22. The 12 ticks on the next one to put us at +34. Then we picked up another 8 ticks on the next one to get us to 42. Then we picked up 10 ticks to get us to 52. And we still hadn't had our goal. Or I guess that's where this is where we got the goal for the day on this one right here, 52. Then I didn't trade anymore for a little while. We got into the lesson plan a little more. And I took this one right here for 30 ticks. That got us up to 82 on the NQ. Okay, and that was it. During the break, let's see, there was a blue arrow there, nice blue arrow right there. And that was all there was. All right, so it wasn't easy trading today. I mean, you know, if you just did the blue arrows, you probably did okay, depending on what market you were on. But there's not a ton of opportunity. And the bigger picture stuff, we did get to look at the bigger picture stuff a bit in the lesson plan today, and it was kind of fun to look at that because I was doing the leg lengths on the bigger picture compared to the smaller picture, and people were asking good questions in the room this morning. I did record the whole thing this morning. I thought I missed the last part of the recording, like the last half an hour or 40 minutes of the session this morning, but I ended up recording the whole thing from when I started the lesson plan. And I started the lesson plan early, so whenever I do that recording, whenever I run to that, put that out there. That's gonna be good stuff. Yesterday's recording, guys who are interested, I stuck that out in the breeze. If you want to watch yesterday's recording, I did render it and I stuck it out in the breeze for you to take a look at. I'm going to take it out of the breeze probably, I don't know, maybe tomorrow or the next day and put it where it's supposed to be. But I just wanted to stick it out there for you because I got some good feedback on that. And there are some people who only have access to the breeze. Okay. All right, so that's where I ended up for the day. All right, so we go back here. Looking at the spreadsheet, we ended up with, if you're going to read the spreadsheet, you got to read all 60 risk exclusions at the bottom. We ended up with 82 on the NQ, 25 on the Russell, minus 10 on the crude, and minus 10 on the ES. Put us at plus 310 overall on morning session. Today took 83 minutes and 18 trades to get to $1,430. We took a total of 20 trades this morning. So on the month now, we're up $8,387. That's over 16 trading days, averaging $524 per contract per 2-hour trading day. On the year, now we've got our goal for the day on 16 out of 16 days, and we're on the 16th day. And hopefully those numbers are going to keep adding up together in the same all year long. Not gonna hold it. I've gone 175 days since our last red day. And if you're to quit trading when you get your goal for the day and add one contract a month starting January of 2023, which we did, 24/20 blueprint. So far this year, you would only had to work 7 hours, and you'd be averaging $4,355 per hour, 13 contracts on. Okay. All right, so if you were to break that down, I should probably put in another column here that does it just with one contract. If you were to break it down, so 8,300. No, if you're just supposed to be with one contract, you need that divided by 13, right? So that equals that. By 13. Oops. I'll do this on there a little bit. I don't have to do this right now. But I'll put another column in that breaks it down, breaks this number down with one contract. Starting again, I guess, with one contract throughout the year. Okay, I'll put another column in because this is starting with 13 contracts because we're doing 24/20 blueprint. But if we were to start with one contract at the beginning of this year, we'll have all the same columns put in there again at some point. All right, that's going to drive some people crazy because they keep track of all the numbers for me or with me, just making sure all my numbers are right. Anytime I put a change in, it's like a big change. Anyway, that is it, guys. I am going to start the live stream right now. Okay, and we'll jump back into there and start trading again. Okay, Michael, I was talking about you right there. All right. But I appreciate it. I appreciate that you keep my numbers square. All right, the stream hasn't started yet. It's still in the gray spot right now, waiting for it to start. Okay, it is ready to go. I'm trying, but it's just not there yet. Okay, thank you. That's good. I'm trying to move this stuff out of the way here. Wow. Because something happened to the one I did yesterday, too. Okay. All right. Well, no, I'm using the same browser I always use. It messed up yesterday, too. So I don't know what happened there yesterday. Okay. Well, I don't know. It says here that it's been going for 1 minute and 11 seconds. Oh, yeah. Yesterday, the recording never came around yesterday. You know, I was just going to delete it yesterday, but I couldn't. I don't know what happened to the one yesterday. Okay, yeah, there's a little bit of delay between, I think, because right now I'm at 1 minute 30. All right, well, let's start trading. The NQ's got a trade coming up right here, I believe. I can get down there to my DOM since everything's all covered up in here. I am at my DOM now, so I'll be able to take it down close here on the NQ. That is a shorting opportunity. Big blue arrow short. There it is. Now, there was a gap over here a little while ago, and it's trading really, really thin. It's going to go 8 ticks into profit for me to bump the stop to break even. So when it hits 59.50, I'll go to break even. There it is. Still break even. Now I have a 30 tick target on this, but I'm just going to lock in 4 here. And I am out with 4. Okay, I have a tick target, but it's got all these gaps right here way down. Now I know on some other platforms, you may not have that gap there. This is just the way the TradingView does it, the way that they deal with range bars. Now if I look at, let's go look at this one, and we'll go here. Put this on the NQ, if we can. NQH. I don't know if it's going to give us, it did give us the data. Okay. So this is a 7 range, but on the 7 range, you can see there's no gaps in here anywhere. If we bump this to a 15 range, do we have one in here? Right there, 15 range, there it is. You can see it didn't give us any gaps. Where here, it did give us gaps. It actually doesn't even look the same in there, does it? NQH 15 range. I mean, it looks kind of the same, but this area right here is where we had the gaps, right here on the NQ, and recovered right here, but recovered on the other side of the ribbon. Interesting. Okay, well, it's the way that TradingView handles range bars. So I'm going to attribute that to. Anyway, hopefully the live stream is still going. We ended up getting just 4 ticks on this move down. We want to see it put in a lower swing. It looks kind of like it did this gap stuff right here. No, it's well, it is what it is. Deal with it on the chart. Okay, good. I mean, yesterday's got totally messed up. I don't know why. You know, I've been avoiding using the Chrome browser for over a week now. I haven't used the Chrome browser. So it's nothing to do with the browser. I've been using the same browser all week. But I mean, that could be it. Maybe I've worn it out. Maybe I need to open up a new Bing or a new Explorer browser. I could try it on the Chrome browser, but my computer is running better by not using the Chrome browser. Over here right now on the Russell, we have a black arrow, but we have a trend change. After the trend change, I like to pull back up and hit the ribbon. Now, I know this is from the lesson plan, but the reason I like it to pull back up and hit the ribbon, all these things from today's lesson plan I had in here, the old school stuff. Yeah, the reason I like it to pull back and hit the ribbon is because after price gets below the BBC, you want it to pull back up and test the BBC, and the BBC should hold. If the BBC holds, you should be at the beginning of a new trend. That's the way to look at it. This is the old school stuff right here, mixed with a little bit of new school stuff. It's all the same, really. If you look at the ribbon in here, the ribbons are the same. But yeah, we don't have to have paint bars anymore and stuff like that. You don't have to draw trend lines anymore. You don't have to have paint bars. You don't have to have extra lines down here in your slingshot. We really went through it all this morning in a lot of detail. So it's kind of neat walking down memory lane like that, seeing all the stuff we used to do. It makes it so much easier now. Appreciate all the stuff that we have here. So I was really looking for it to pull back and hit the ribbon now. If it puts in a lower swing here, that'll be enough for me to take another black arrow. I don't really have to hit the ribbon after it's given all that information there for us. Over here, though, you see we bounced off the ribbon here with this blue one that we took 4 ticks on. That really hasn't gotten any lower than that. When we look at that over here, this right over here is the swing low. Now, this does not even seem like it's a 15-tick range bar, does it? For each one of these bars, really 15 ticks high. 53.75 up to, yeah, 57.50. Yep. So that makes me wonder about this one. Let's go here and here. Okay, well, it's all the same, I guess. All right, so we do have a lower swing here now on the Russell. That's what I was looking for after these black arrows. Okay, we want to get that lower swing in there. And now this is pulled back, but it didn't put in a lower swing, so we don't have any more trades here. It's going into a no trade zone anyway. That's what this aqua background is here. It's a no trade zone. Okay. So we want this to pull back up here. Now get up into the ribbon. We did put in the lower swing now. We're out of the no trades, and we did put in the lower swing. To get a trade, we need this to get up into the overbought for this to get up into the ribbon. All right. That's what we need to have a trade right now. And we don't have it there. Over here on the crude oil, we need to put in a lower swing. It's almost there. The Russell did put in a lower swing. It's starting to pull back. The ES is still in a no trade zone. And back to the NQ, we're in the overbought now. So we could get a black arrow right now. We haven't hit the ribbon yet, so we could get a black arrow coming out of the overbought right now. If it hits the ribbon, then we could get a blue arrow. If it goes deep into the ribbon, then we could get a green arrow. Right? And level of probability, black lowest, blue next, blue highest, green middle. Right? But right now it's looking like it's going to be a black arrow if we get it down close on this and it pulls it out of the overbought. Okay, now it could be a blue. Right? It hasn't hit the black line yet, so you're still looking at a blue arrow here, which is the highest probability trade. Right? So it's going to be 4 points from the top of the bar. Now it'll be a green because we've gone through the black line. So now it'll be a green. And you're looking for 4 points from the top of the trade, 52.75. 52.75 is what you'd be selling on that right now. Right now, 53-ish. Down there. All right. Now you get the green arrow right there. You see, that's what I was just explaining to you. The green arrow. And it gave me a little slippage here, but after I get 8 ticks in profit, it's got to get down here to 50.25. We to bump the stop to break even. Okay. Now it starts out with a 20 tick stop. It should be 5 points away. A 20 tick stop. Okay. And if it stops me out, it stops me out. But what it should do is go down to this level right here. Now I have a 30 tick target on this. This is more than 30 ticks if it makes it down to that level. But I have a 30 tick target on it. Oh, it just took me out. Minus 20. Did you see how that all came together right there? When I was analyzing that as it was coming together, what kind of arrow it was going to be if you're going to get an arrow. Well, here, this one might have stopped you out to the tick, but the next one gave you twice what we would have stopped out on. Okay, and I did take this away here on the Russell. Stop going to break even on that right now. And that should go down here to this level right there. Okay, so right now I'm going to lock in, I don't know, that's 8 ticks right there. Okay, and now I'm going to lock in 10 ticks on this. And it should go down here, right here to 88.3, at least right here is where it should go. Okay, I have a 30 tick target on that too, but it just gave me 10 or 12 or whatever that was. But that's your highest probability trade right there. Right, it needs to put it in a swing. It needs to go down below this level now. Right. I don't think there's any questions coming in the live stream, and hopefully the live stream is working today. It didn't work. I mean, it worked yesterday, but the recording part of it didn't work. And if it doesn't. Huh. Okay, well, that's good. That's good. I'm going to check it when we're done and see, because yesterday I could not get it to run past like the first. Well, I couldn't actually get it to start. I couldn't even get it to start. So yesterday's ended up, it ended up being a very useful one. They can't always go to YouTube. You can always go to youtube.com/CFRN. CFRN. Because whatever we're doing right here, we are also streaming live on that channel every day. youtube.com/CFRN. Okay. If you're watching it here after the fact and there's something messes up and it doesn't go any further than this right now, you can always go there. All right. So it's 1:13. We have 17 minutes left in here. Let's go take a look at the other things that are going on outside our little world. All right, this is the Euro USD on a 30-minute chart. Okay, so on the 30-minute chart, Euro USD, we have, well, we'll look for to get up to this, up above this level right here is what we're looking for. Okay, and we don't really have all that much more going on there. Yeah, well, that's Euro USD. Let's look at the big coin. That's what I really wanted to see. Bitcoin and see if that's getting killed today. It's not. It's actually having to come back today. All right, let's look at it on a daily. All right, so on a daily, shrink this down. On a daily, this was the danger area down here. If you got down below that, that was gonna be a big problem. We see what it's done here. We got down below the ribbon, we got down below the BBC, and now it's pulling back. Okay. The black step line right here is crossed up above the MA1. So it's crossed up above, right, and falling. So what it should do right now is pull back up to right here, the 42,000 probably. 42,000 and then sell off for 42,000 is what it probably should do. Okay. That is probably what it should do. Let's see. What other one? We'll get Mr. Let's see if that's recovered at all today. So it was getting killed. Nope. Still getting killed. But this box that I drew here is what it should try to stay in right here. It should try to stay in this box over the next week or so. It should probably try to stay in this box on the daily. And then make another move down, break the neckline, make a move down is what it should do. Now, we were saying before that it was going to come down here and bounce off the ribbon, which it did back here. And then we were thinking it was going to come back down to the ribbon and bounce again, but it didn't bounce the second time. It went right through it. What was the other one? Mara. There's another one. That one is getting killed just like Mr. And that did the same kind of bounce, but the second time it went right through. Wow, that's a huge move down from 30 bucks up here all the way down to 15 right now. And right here, this being a little weak shoulder right here, and this being another shoulder here. The next level down is all the way down here to 8 bucks. So that is a tough one you're holding on to right now. Let's go back to just 4 here so we can focus on the futures again for a minute. And we're not coming out of the overbought here, so we don't have an arrow yet. We're not coming out of the overbought here, so we don't have an arrow yet there either. But when we do come out of the overbought, we will have arrows. There's one there. And here's the one on the NQ. Stop to break even on that. Stop to plus. I was going to put it at +4, but now I won't. And now I'm on a break even on that one. And the Russell's also got a trade in here. It's got a black arrow trade already. It could pull back up and hit. It's kind of questionable here on the Russell. I think it is going to pull back up and hit the ribbon. Because I took this one over here on the NQ, I can't take another trade off the ribbon right here if it does develop. Because I didn't take this one on the Russell, I can a blue arrow or a green arrow if it does develop over here. See, this could turn into a green arrow over here on the NQ now. But because I took that trade, I committed to it putting in a lower swing. If it doesn't put it in the lower swing, I can't trade in that direction again. Okay, and that's what it looks like. It's going to give us an arrow right there, a green arrow that's going to put in the lower swing that I can't take. I can do it over here on the Russell if it gave a green arrow, but it didn't because it didn't come out of the overbought. Let's up and see if we're in the right color. Yeah, it was in the black was in the red for sure right there. So that's a valid trade. I thought. Here it is. So the Russell's doing okay with us so far in this session. That's 20 ticks there on the Russell. Oh, that's 10 ticks in this one, but 20 ticks altogether that we've got on the Russell. It should go down, put it in a lower swing, get down below this level. Like it took, we were saying it should get below this level, and it did. And then it gave the blue arrow that I missed. And or no, wait, did I get that blue arrow? And I was saying it should get below this level. I think that's what it was. This one is down below this level now. And the green arrow here I couldn't do because I did that black arrow, but that green arrow just put in a nice lower swing. So get ready for another arrow that should be coming up. Actually, it's not in the overbought, so you're not going to get an arrow out of this. It's got to hit the ribbon, and I think it's just barely hitting the ribbon right here. So we're going to get no arrow, but it's a valid trade. Okay, there's no arrow that's associated with this, but it's a valid trade. All right, and I jumped on that one, and my stop is at break even again, and I'm going to try to log in 4 ticks again and see where it goes. All right. Now it should put in a lower swing. It took me out with 4. It should put in a lower swing. The last few I've done. And just like this one over here on the Russell did, came back up and hit it and put in a lower swing. So for those of you guys that are watching the live stream, maybe just watching the live stream, do see what's going on here, right? The markets are always doing the same thing, and our indicators are there to give you precise entries. The markets are going up and down and up and down and up and down and up and down and up and down, and now it should go up and then go back down, right? Now that it's put in a lower swing, it should go up and then go back down, right? And so our indicators are there to get you in here, get you out here, get you in here. Well, in this case, get you out here, get you in somewhere in here. I get in here. Right, something like that. No, on this one I got in here. I get it off of there on that one. This one I got in over here, and I didn't get to take the blue arrow, I think, or one of these I did not exactly right. I wasn't able to take the green arrow or the blue arrow because I got in somewhere else. But anyway, you see our indicators are there to give you precise entries. That's what I'm trying to say. The indicators are there to help you pick up here when it pulls back and it's ready to go down for the next leg. All right, so right up here. Help you pick when it pulls back and it's ready to go down for the next leg. See, it's got to hit the ribbon or it's got to get into the order bottom. One or the other to get the trade. Now it just hit the ribbon. So now you can look for the down close and take the down close, right? If you didn't have the ribbon there, you wouldn't know, right? You get that? That's what the indicators are for. They're in there to help you identify high probability trade setups. Okay, like this one. And so every trade has predefined risk because these are range bars. Every trade you know ahead of time how big your stop is going to be because these are range bars. And so you know where your target should be. The minimum target should be the prior swing low, right? Because every trade, you make the commitment that it's going to continue the trend. Right? Mentally, you got to make that commitment that it's going to continue the trend. So every trade, you get in the trade at the right spot, you manage your stops. It starts out with 10 ticks of risk. And if it gets down here to 4 ticks in profit, the stop goes to break even. On a 7-tick range, it's 4 ticks in profit. On a 15-tick range, it's 8 ticks in profit. Just gotta go down one more tick like that. Now I just hit break even. My stop's at break even. I don't have any risk on this trade. It should go down here to 83.6 right here. Happens to be the low of the day. Okay. So I'm gonna lock in some profit on this, and it should go down there. Right? It should actually go through there, through the low of the day, and I think it will. Okay, so there's +5. I think we're going to get a big push down here. I think this number down here at 83.2, that's 16 ticks from where it is right here. I think we're going to hit that number. Okay, so maybe at +5, we're going to get +16 on this. We'll see what happens. And is that right there at the midpoint? I think it is right there. It's 83.0 was at the midpoint. So it's going down to the midpoint, I think, between the trading zones. That's what it's doing right now. I'm going to lock in some more on this because, well, I'd be a fool not to. There it is. Oh, I hit the number, but it didn't give it to me. Okay, there's 11 ticks. And we're out with 11. Okay. But it did everything that it should do right there. Everything that it should do. I just walked you through that whole thing from beginning to end. It did everything that it should do, right? And if we move this back here, I was saying you get in here, you get out here. That's exactly what we just did, right? I just walked you through the whole thing. Does anybody have any questions about that? And that is pretty simple and straightforward. And it does it again and again and again. That's why we do what we do. That's what the indicators are there for. So you can see all that stuff coming ahead of time. Sorry, that was a big noise in the microphone. I forgot how sensitive my microphone is. That big sigh. Sorry. Sometimes I just wish. I guess I can record this. It actually was recorded. Okay. Oh, well, that's good. That's good. Thank you. Because I know this microphone can be really sensitive. All right. So now we're waiting. Waiting now for the next pullback, the next opportunity. So while we're focused over there on the Russell, we got 3 blue arrows right here. Now the blue arrows are not going to be any that could be anything you want to take because the outer band's flat, right? Now, normally that flatness is going to be taken out by no trade zone, but for some reason right here it didn't. But you don't just blindly take the blue arrows. If you did take the first one, you would have been in it throughout all of them and gotten a break even right over here. Okay. If you took the first one, you left your stop where it's supposed to be and you didn't bump your stop, you would have gotten out at a break even. At the worst, you would have gotten out at a break even. Never put in a higher swing, so you never jump in it again. All right. But whenever a blue arrow comes, or whenever any arrow comes, you look at the outer bands. And if the outer bands are completely flat, then don't take it. Right? You want to have a trend. Everything we do is got to be with the trend. Everything's got to be with the trend. All right. So we've got a high here of 84.8. 84.7. I want to see a down close on this 84.7 minus 8. What would you be selling? 0.5, right? 0.5. And there it is. Actually, did I do that right? No, it's not 0.5. Sorry. You'd be selling. I totally did that wrong. 0.7 minus 8. You'd be selling point. I totally did that wrong. You'd be selling 0.9. But I did it wrong anyway. So I didn't get filled at 0.5. But we didn't get any kind of an arrow because it didn't come out of the overbought. So I could still get in this on a down close now. It would be a green arrow on a down close right now. And there it is. I can still jump in it. And I'm trying to right now. I just did. Okay, here it is. I totally did the math wrong on that last one. I don't believe I did that. What was I thinking? I was totally thinking something else. Something wrong in my mind. Anyway, we want to see it get down here at 83.8. Right, at 83.8, we'll bump that stop to break even. At a minimum, it should get down here to the prior swing low. Okay. But you can see it's working on the low of the day right here. That is the prior swing low, was the low of the day. The NQ starting to move up. The ES is actually in a spot where it should bounce off the ribbon right here. Okay, this could stop us out. All the other indices are tending to move up, but the ES could be bouncing down right here. And the 4 takes in profit, and we bump the stop to break even. Okay, trade what's in front of you. 4 takes in profit, and the stop goes to break even. Now, if ever the other markets are bugging you because you think that they may be leading something, just get rid of them. You don't need to see that. If it's making you have negative thoughts, just get rid of them. I did just stop out on that Russell, but making you have negative thoughts, then you don't need to be looking at that. All right, so it's 1:27, guys. We have about 3 minutes left in here. I don't see any questions anywhere. Anywhere? No questions anywhere right now. If you, I don't think I say this enough anymore. If you have not taken a free trial with us, go here to, if you're watching in live stream, go here to mytradingiq.com. Click this button right here to take a free trial. If you like what you see and you want to have access to the indicators, you got to click that button to take the free trial. Fill out the registration form. There is no credit card required to register, right? First name, last name, email, phone number, all that stuff. Down here, give us your TradingView login ID or username right here, okay? Give us that TradingView login ID or username right there and hit register, okay? That is all that you need to do, right? All right. So on the NQ, we want that to pull all the way back down and bounce off the ribbon right here. That's what I was talking about. This was starting to go up, and this was tending to go up. And that's what stopped us out on that one. But it is what it is. Hopefully we get a nice trade here on the NQ. We are in the oversold, and we did already bounce off the ribbon once, so we don't have to actually hit the ribbon again. So as soon as we come out of the oversold, we'll have a trade. We're going to have a black arrow right there, though. If it pulls out of the oversold right now, the NQ, it will give us a black arrow right here. Is what I think we're getting right there. A black arrow And here it is, and stop to break even on it. And it should go up above the prior swing on it. It should get up above 68.25 is what it should do. Because I took that, I made the commitment to the upside. Right? I could have waited for it to pull back and hit the ribbon, but I made the commitment to the upside when I took that. So I can't take another trade in that direction until it makes the upside. But you guys, if you did not take it, you can take anything that bounces off the ribbon here. Okay. It's a lot of stuff. Okay, hold on a second. We're bouncing off the ribbon here now. We've run out of time, but we're bouncing off the ribbon right here. Blue arrow right now. If it comes on, the oversold. There it is. Blue arrow. Nice probability trade. Now, I can't take it because I took the black arrow and I got to break even on it, but you guys can take it and anticipate that it's going to get up above this level right here. All right. So I guess that's where we're going to have to end this. I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Right, Dwayne, if you are ready to take it back, you can.
Yes, sir. I'm ready.
We'll go over here.
Okay, recap of the morning session.
Today, it took a while. 83 minutes and 18 trades to get to $1,430. Right, and Don just asked a question. I'll answer your question, Tom, without giving you any charts. Dwayne can also do it for you, but I'll just answer you mine really quick.
You can take the charts back if you want.
Okay, all right, I'll take them back just for a minute. But today it took 83 minutes and 18 trades to get to $1,430. We still did get the goal for the day, but it just took forever. Let me end the live stream here for a second. I just gotta make sure I end that because I tend to leave that thing running by accident. There. Okay. All right, so I ended the live stream, and it looks like there are some views. So let me take the charts back really quick, and I'll answer Don's question. Here we go. Should be looking over there now, and let me get the chart, the appropriate chart, up here. ES, big picture. All right, so we're bouncing off the ribbon right here. Now, in the full day's action, this ribbon is perfectly positioned to be at the 50% mark. So there's a couple of things happening right here. It should act as support, and it should push it back up. I'm doing this wrong. Sorry, I did that wrong. Let me fix that. Hold it. Okay, I guess I was doing it wrong because the high is over here instead of being over here. But we can do it either way. We'll just do it from here. Say there to there is the day's action, right? So this is the 50% marker. This is what I was talking about. The ribbon is right at the right spot to be the 50% marker. So it's got support here at the 50% and it's got support here at the ribbon. So it should bounce up off of that is what I think it should do. Now, whether it does do that, I don't know. We'll see how this candle closes. Well, this last candle began right here. It's already down from 25 all the way down to 20. So already down 5 points in this candle. But I think it could bounce right off of this level. It should bounce off of this level. Hold on. We'll see
if it does bounce off of that, pull back to the ribbon, then you've got at 49.28, you've got potential resistance at the step line and balloon climbing.
But right here, you see how the black step line just crossed below the Emini 1. We got our bounce off the ribbon right after the cross, and usually it's going to hold after the cross. It's already done it a couple of times. So it's already held here, and it's already held here. So this is the third bounce off the ribbon right here, the third test of it. We'll see. Time will tell. In my world, I trade what's in front of me. It's good to know what's going on there, though. Good to know. And so that NQ trade, that first one stopped out, but you would have done it right back on this blue arrow right here. That last one that I was talking about, the live stream. But all right, you can have it back now, T.
Okie doke.
If you are ready.
Yeah. Okie doke. And you already gave me the recap of the recap, and
I did. I did indeed.
I may have failed to say good job, but way to hang in there.
Thank you. Thank you. It was a challenge today.
Ever get it? You know, some days, guys, I know it looks like a walk in the park, you know, and some days it is. And that's how it's always going to be. So as you begin to learn how to trade and you have a couple good days where you get your goal for the day and the first trade, and then all of a sudden you come up against the day where your first trade gets stopped out and your second trade gets stopped out. Maybe even your third trade gets stopped out. What is that telling you? Okay, it could be telling you that you understand the rules completely, that you simply happen to step in at the right moment on day 1, 2, and 3, and then on day 4, 5, and 6, the market did not do the next high probability thing. So don't beat yourself up. Don't throw in the towel. Don't start that, well, back to the drawing board. I thought I was learning how to trade, and now obviously I'm not. Okay? You guys have seen Michael trade every morning for many years, those of you that have been around a while. But yet, he had to hang in there and, you know, work for his money today. So you're never going to get to the point. I want you to understand, you're never going to get to the point where you'll be a one and done trader every day for the rest of your life. That just isn't going to happen. It's not possible. It's not feasible. So don't waste your time or treasure trying to find the Holy Grail, which not only doesn't exist, but can exist, because it would defy the laws of science, physics, and even God. So anyway, Michael, I'm sure you have things you have to do. I'll be sending you a message over in Telegram here in a little bit.
Okay, sounds good.
All right. All right, guys, we'll pick up where we left off. We're on crude oil. Again, the vertical line separates today, Wednesday, from yesterday, Tuesday. So where the market finds support at the zone, where it find resistance at the zone, send it back to the zone, support. We'd send it all the way up to this zone, where it found resistance. Found resistance here yesterday off the London Open, and it found resistance at the zone at 11 a.m. Eastern yesterday. And of course it found resistance there after we opened last night. We came down to the zone. When we drop to a zone, we expect support until proven otherwise. 70% of the time you're going to get consolidation, just like that. Okay? And so we got above the BBC, we made the run all the way to the target. Then we got below the BBC, got below the zone, dropped all the way to the short target, to the tick. That support sent us looking for resistance, which we found at the zone. Resistance always sends the market looking for support, which it found at the BBC. And the support from the BBC and this bullish cross right here. Okay, that's real important, because if price comes back to that area, yeah, we've already had a candle spike it, so that sort of negates it. If I see a better example, I'll show you. But when price returns to this area, you'll still probably find good support the first time down. But crude seems to want to go higher. Now we got a zone overhead as resistance in the step line. And because blue and climbing is directly above price, that is potential resistance. So where is the opportunity? Right about there. I don't like to be that close. So I like to be very conservative. 75.55 to 75.70. That would be $150 per contract traded. For the 10 contract trader, that represents $1,500. But you don't put the cart before the horse. The 2420 blueprint will walk you through the process, putting together 10 consecutive days in a row in your demo account. And only then will it give you the green light to go live. You go live with one contract. Now that you're trading live money, real money, you have a goal, and that is to increase your account balance by $2 grand. Once you accomplish that, the blueprint will then give you the green light to add a second contract. The big difference between the first and second contract is the first contract is added with your startup capital, the money you funded your account with. But the second contract is funded with profit you earned in the market. So that's the day you go dance in the street, because that's the beginning of building a successful trading business. So now you're trading 2 contracts. So on the S&P, 2 points is $100. On the Dow, 20 points is $100. On crude, which we're on right now, 10 ticks is $100. But once you add that second contract, everything doubles. Same 2 ES points are now worth $200 for the same 2 points, but instead of paying you $100, it pays you $200. With crude, the same 10 ticks now pays you $200 instead of $100 because you're trading 2 contracts. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add when the blueprint says it's time, and you only add with profit you earned in the market. If you have the discipline to follow that formula, it'll make it far more difficult to blow up another account. Not impossible, but you'll have to break some rules. Okay, so follow the blueprint. It's time tested, battle tested, and it has led many, many traders to becoming self-sufficient, where they no longer need someone to tell them when to get in and when to get out. They're perfectly capable of looking at the chart and knowing, because they understand how price flows across all markets and all time frames. Okay, that was crude. Okay, if price can overcome this potential resistance, then there's a window of opportunity there. But what if price comes down through the BBC? Well, we look left and we see there's potential support there. There's potential support there. $74.45 down to $74.30. The zone is 74.25/74.30. By the time we talk again tomorrow during this afternoon broadcast, one of these 2 windows of opportunity will have filled. Most likely. Unless crude just falls asleep at the wheel. Remember, above the BBC, you anticipate higher prices. But once price gets below the BBC, you anticipate lower prices. Now, these candles spiked the zone, but they were still touching the zone. So, price goes up, the zone, think of it as resistance until proven otherwise. When it drops, think of it as support until proven otherwise. Both of these candles are still touching the zone. So that pullback held. Now over here, where we tried one, now these are 30-minute candles, we tried 1, 2, 3 times, and then finally, on the 4th attempt, okay, we got through. Then we had a candle open and close above the zone. So it overcame the zone, but then quickly failed. Why did it quickly fail? At the resistance you're seeing today materialized. It's the first time that swing high has been challenged since then. What did it do? When the market finds resistance, people often ask me, so how far back do I have to look? Well, hopefully what I just showed you, we had to look all the way back to December 27th. Okay, and we're almost to January 27th. Today's the 24th. So we had to look back almost a month. But it told us to expect resistance there. And that's exactly what we got. You should hang that and frame it. Okay, so now price is straddling the BBC. Will it hold or will it not hold? If it doesn't hold, there's your trade. If it does hold, there's your trade. If it doesn't hold, there's your trade. And over time, you will learn to read the chart, understand how price flows, and it will become obvious to you where the windows of opportunity are. So as price approaches this area, or this area, go to your 7-tick range chart and take the trade. Obviously, you're going to be trading long here. You're going to be trading short here. But by using your 7-tick range chart to execute the trade, then you're entering with surgical precision. This is just giving you the big picture idea of where there are no visible obstacles. Now, oh, so that means if I just do that, I'll never get stopped out again. No, not at all. And the Logic 247 channel, as I've said earlier, got over 15,900 individual alerts. What we've averaged on a weekly basis is 20% or less of the alerts being stopped out because the market did not do the next high probability thing, or there was a lack of follow through. And you have no control over that. No indicator, no oscillator, no crystal ball, no guru. Nobody can tell you with certainty what the next tick in the market is going to be. Now you can flip a coin and maybe be right 50% of the time. But knowing what the next high probability move is far different than knowing with certainty what the next move is. Got to be cautious of those who tell you they know with certainty what's going to happen next. Okay? Knowing what's likely to happen. Well, 20% of the time, Logic 247 wasn't wrong. It's just that the market did not do or complete. Well, because it was stopped out, it means it triggered. It just didn't make it all the way to its target. That's over about 5 years. So anyway, no need to get hung up on that. Here's gold. Here's where we opened last night. Consolidated at the zone and the BBC. And then we dropped to the target and then to the zone. Keep in mind, this is the zone that was published Monday morning at 6:15 a.m. Eastern. And it's given us support today. Yesterday it gave us resistance, it gave us support, gave us resistance, support, resistance, support. And we finally got above the zone. We had a high, lower high, and a lower high. So that sent us back to the same zone that provided support all day yesterday. And it just so happens there is a bullish cross right there at the zone. So again, another reason to expect support there on top of the zone. And so we consolidate, get above the BBC, move up to the zone, retrace, and then off we go. Now, this is really part of a consolidation, but if you want to look at this as a slice, what happened? When the slice ran out of steam on its way to the target, it retraced back to the zone it sliced through and then continued in the direction of the slice. The zone is 2029/2030. So it's a $400 per contract move up to the target. Then we consolidated a little bit, hit the zone basically to the tick. The zone's 2038/39. Yep, we missed it by one tick, 2037.9. So that resistance is going to go send the market looking for support. Well, found some support here where we found it earlier today and yesterday. It gave us a little bit of a bounce, but not a lot. And then big move to the downside. Market found support here. That support was defined on January 18th. Okay. Gave us a bounce. And now price is going to attempt to go through it again. Now the zone below is at 2009/2010. So (2011 to 2010), that would be your goal for the day. Now the step line is crossed, so we might see a pullback to the BBC here. Okay, in fact, that's pretty likely. So keep an eye out for that. Silver. Here's where we opened. Pull back to the BBC, the pullback held. Sent us up to the zone, we consolidated. Sent us up to the target. You only need 2 pennies to get your goal for the day with silver. This candle opened at 22.64 and it ran up to 68 at the target. That's 4 pennies. It's $200 per contract traded. For the 10 contract trader, it's $2 grand. And we continued on up to the next zone where we had some wide ranging consolidation. And then we have this huge drop, but the BBC catches it beautifully. Remember, the pullback holds more often than it doesn't. And that support sent us up to the zone resistance. Resistance sends the market looking for support, BBC. It's kind of like Legos. It's kind of like a jigsaw puzzle. It's just understanding where the market is likely to find support and resistance and then trading in those areas. Okay. The euro opened here last night just above the zone, above the BBC. We got blue and climbing, so we expect higher prices, and it took us right up to the target. Then the zone. Once we hit the zone, get a pullback to the BBC, the pullback held. This is a red candle all the way down to the BBC. But by the time the 30-minute candle closed, price had risen back to here. And then the next candle opened, and it took us across a couple zones. Found resistance here. This resistance is right there. Okay. You get a pullback, cross a couple more zones, then you pull back to the BBC. Now price is below the BBC. Okay. So where would your window of opportunity be here? Something like that. You got to get below these lows. And there's a high probability that when price hits this zone, if price continues to drop. Now, right now, the pullback is still holding. But we got red and falling overhead, which is bearish. Got the step line directly overhead, that's bearish. So you got to get below this area of potential support. And then you have to anticipate that at the zone, you're going to find support. Now, it might trade right through the zone. We've seen it trade through the zone a couple times on the euro today. And that brings us all the way back to the daily chart, where we find ourselves well off the high of the day. High of the day so far, 49.33 and a quarter. Did the bulls stage a rally this afternoon? Absolutely. If we close back below the 62, there's potential support here at the step line because it's directly below price and below and climbing. And now remember, it took us like 4 days or 4 attempts to get through. It was on the 5th attempt, I guess, that we got through the 50% fib extension. So it was resistance, 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 resistance. If we come back down, it will most likely be support. At least good enough for a bounce. And then right below the 50, we've got the BBC. The pullback holds more often than not. Since we had the bullish cross, we've pulled back on the daily chart to the BBC once, up to the 50, back to the BBC, and now we've traded substantially higher. So do we have another pullback coming? I'd say we probably do. Okay. To become a lifetime member through the end of the month, go to mytradingiq.com. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. Whether you want to be a banker, baker, or a candlestick maker, you need somebody to teach you how to do the job. And we're willing to do that for you. All you got to do is become a member. 2 hours and 15 minutes of live training every trading day. Plus, unlimited one-on-one private mentoring, strategy you learn. And the indicators that you own for life as a passport holder are fluid across all markets and all time frames. In other words, whether you like to trade stocks or futures or crypto or Forex or ETFs or maybe a little of each, same strategy and the same indicators will work exactly the same because price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again. I think I just showed you a pretty good example of that. As a passport holder, you'll receive the Logic 247 alerts around the clock, concierge trade alerts each evening when they're posted, and you'll attend the Thursday night members only workshop at 8 p.m. Eastern. That's tomorrow night. Once you become a passport holder, not only will you be able to attend the Thursday night members only workshop, but you'll have the key to the vault that allows you to watch previous workshops. Everything a trader needs, all under one roof, one low price through the end of the month. Now, as long as you're a passport holder by the end of the month, nothing will change for you at all, ever. So if you've been trying to make up your mind, now would be a good time. And if you become a passport holder today or tomorrow, then you'll be in tomorrow night's members only workshop. Okay. All right. Let us wrap it up with our good word for the day. One of the most often repeated phrases in the Bible is, fear not. We've talked about that a lot. So today I want to encourage you that you can overcome your fears. In Isaiah 41:10, it says, do not fear, for I am with you. That's God talking. The first lady to win a Nobel Prize was a French physicist, Madame Marie Curie. She said, nothing in life is to be feared, only understood. So, number one, get the facts about what you fear to take away the mystery and misinformation from it. Number two, instead of focusing on your phobia or your fear, focus on God's promises. Do not fear, for I am with you. Do not be afraid, for I am your God. I will strengthen you. I will help you. I will hold on to you with my righteous right hand. Again, that's Isaiah 41:10. Note the words, I will strengthen you. As your faith in God grows stronger, the threat of your fears will grow weaker. Number three, relax. Imagine yourself peaceful and free of the bondage of fear. Envision the positive effect on your life when you're delivered. Number four, confront each one of your fear-triggering circumstances with baby steps. Every single hurdle you conquer strengthens you. So commit yourself to overcoming the fears that have wreaked havoc on your peace of mind. Jesus said in John 14:27, my peace I give to you, not as the world gives do I give to you. Let not your heart be troubled, neither let it be afraid. Note those words, let not. Don't let fear rule you. It's one of the most powerful tools the enemy has. Fear. Become proactive and arm yourself with the promises of God. Run towards your fears as David ran towards Goliath, knowing that in the name of the Lord, you'll win. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Yeah, we'll get it right this time. See you guys tomorrow.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.